October is here, and the market is showing signs of life. If you're looking for stocks with serious upside in the short to medium term, this video is for you. We're going to dig into 5 hot stocks that are getting strong momentum, backing from analysts, and technical setups that suggest major upside ahead. I'll walk you through why each one is interesting, what the risks are, and how to approach them depending on whether you're a swing trader or a buy-and-hold investor. Let's dive in. Before diving into individual names, it's essential to understand the environment supporting this potential run. Over the past few weeks, the overall equity market has shown rising volume, higher lows, and repeated tests of resistance that are holding. That's a healthy sign for continuation. Analysts are becoming more bullish. Several stocks now see upgraded earnings estimates, and in some cases, upward revisions haven't fully priced in new sales pipelines. Macro support is aligning. Inflation signals are cooling. The Fed could lean dovish over time, and investor sentiment is gradually shifting from fear to greed. The earnings calendar ahead is critical. Many of the stocks I'll mention are poised to break out or reaccelerate around earnings. That makes them catalysts you want to watch closely. So, yes, the overall wind is at our backs, but it doesn't guarantee every stock will soar. You still need to pick the right ones, manage risk, and move with conviction. Stock number 1, CrowdStrike, CRWD. CrowdStrike, CRWD, is a leader in cloud-based cybersecurity and endpoint protection. As enterprises continue to shift to hybrid work, remote networks, and cloud infrastructures, security gets more crucial. Moreover, CrowdStrike has been leaning into AI-driven threat detection, which gives it a narrative edge. What's working now? According to a recent MarketBeat article, CRWD reinvigorates its growth outlook, backed by new partnerships, for example, with Salesforce, and improved analyst sentiment. Its stock already had a solid run in September. Now it's consolidating near support, which may offer a clean entry if it breaks out. There's room for multiple expansion. Many investors have expectations baked in, but the next leg of revaluation may come as the company demonstrates sustained margin growth. Risks to watch. Competitive intensity in cybersecurity is high. New entrants, regulatory changes, or cybersecurity lapses could spook the stock. Execution risk. If margins compress or guidance disappoints, investors may sell the story quickly. Valuation stretch. If CRWD runs before fundamentals catch up, there's risk of a pullback. Possible price target, upside scenario. MarketBeat suggests a potential Packer 25% upside over the next few quarters as sentiment and fundamentals align. For example, if it trades at USD $490 now, just illustrative, a plus 25% move puts it towards $610. How to play? Swing traders could look for a breakout above consolidation, with volume confirmation. Longer-term holders might scale in and use pullbacks as additional entries. Always watch guidance at the next earnings call. That could move the stock dramatically. Stock number 2, Workday, WDAY. Workday, ticker WDAY, is a leader in enterprise software, particularly HR, financial management, and planning. With AI and automation becoming central to corporate tech stacks, Workday is positioning itself to benefit from increased demand for smart enterprise tools. What's working now? MarketBeat names Workday as one of October's breakout candidates, citing recent sentiment upgrades and improved analyst coverage. The company is deepening partnerships, expanding its ecosystem, and pushing integration with leading AI platforms. It's consolidating after prior gains, a setup for a potential breakout if buyers step in. Risks to watch. Enterprise sales cycles are long. Delays in contracts or macro headwinds could hurt revenue growth. Big tech competition, Microsoft, Oracle, SAP, remains fierce, and switching costs or incentives could shift deals. If the market rotates away from growth tech momentum, WDAY could be vulnerable. Upside scenario, target. Analysts have projected targets toward 285 level from 230 current, as listed in the article, about 25 to 30% upside. How to play. Enter on consolidation breakouts with proper stop losses. If it dips to support, moving averages, watch for bounce setups. For longer-term plays, accumulate during weakness, but keep conviction only if business metrics, new bookings, retention, remain on track. Stock number 3, Salesforce, CRM. Salesforce, ticker CRM, is a powerhouse in customer relationship management, cloud applications, and data platforms. What's working now? MarketBeat's October list includes CRM as a deep value pick with room to re-rate upward. Evercore analysts recently highlighted it as a top pick in enterprise software, especially due to AI tailwinds in 2025. It offers a combination of cash flow, scale, and innovation, oftentimes safer than pure growth names. Risks to watch. Execution risk in integrating AI across its products. Competitive pressures in cloud and analytics. Market sentiment swings in tech can disproportionately affect even strong names. Upside target. Estimates suggest Salesforce could re-rate and climb toward $330 from $238 current in the article. That's 35 to 40% potential if the narrative aligns and execution holds. How to play. A core holding for tech AI exposure with less risk than smaller names. Use dips or consolidation zones as entry opportunities. Watch earnings closely. Surprises, good or bad, can swing the stock sharply. Stock number 4, Oklo. Oklo is an energy or nuclear innovation company working on advanced nuclear reactors. It's more speculative than the names above, but if you're comfortable with higher volatility, it offers asymmetric upside. What's working now? MarketBeat labels Oklo as a candidate for pullback-based entry after a strong rally and recent cooling. Coverage is increasing and investor interest in clean energy and next-gen power is boosting speculative sentiment. The narrative around decarbonization, energy security, and AI-driven data centers needing massive power demand supports upside interest. Risks to watch. Very high execution and regulatory risk. Nuclear projects always carry regulatory, cost overrun, and timeline risk. Volatility. This is not a safe name. It could swing hard both ways. Funding risk. Need continued capital to scale, whether via partnerships, grants, or equity. Upside scenario, target. Oklo's price target in the article is modest, $83.77, relative to its drawdown, but the bigger upside lies in speculative re-rating if nuclear energy hype accelerates. In a bull scenario, it could double or more, but that's high risk. How to play. Allocate only a small portion of your portfolio, 2 to 5%, to speculative names like this. Use tight stop losses, trail profit when it moves. Monitor regulatory updates, funding announcements, and pilot project progress. Stock number 5, Amprius Technologies, AMPX. Amprius, AMPX, is a materials battery technology company focused on next-gen battery tech. With electrification accelerating globally, superior materials and battery efficiency can be game changers. What's working now? According to MarketBeat, AMPX is also in a pullback consolidation, presenting an opportunity if momentum returns. Analysts expect revenue growth to accelerate significantly. Forecasts show 10% sequential growth and 110% year-over-year, driven by new product ramp. It has entered consolidation near support after its breakout run, giving a potential setup for the next leg. Risks to watch. Technology risk. Battery materials must perform, scale, and deliver margins. Supply chain risk. Raw material cost, scarcity, or input inflation could squeeze margins. Execution risk. Going from lab to commercial scale is hard and capital intensive. Upside scenario, target. Based on expectations, a return to prior highs or new highs could yield 50-100% gains depending on execution and investor patience. If it's trading, USD 13 now, a move to 20-25 isn't inconceivable in a bull case. How to play: entry on pullbacks into support zones or moving averages. Use volume confirmation to validate breakouts. Keep alert for earnings surprises, guidance, and technical shifts. How to use these picks. Now that we've covered the 5 names, CRWD, WDAY, CRM, Oklo, AMPX, let's talk strategy. How to build, manage, and trade these picks. Diversify risk across themes, risk profiles. Use CRWD, WDAY, CRM as your core, safer growth picks. Use Oklo and AMPX as your high-risk, high-upside moonshot bets. Don't overweight one stock too heavily unless you have very strong conviction. Stagger entries. Buy into initial setups and scale in gradually on dips or confirmations. Use support zones and moving averages for re-entry points if you're too early. Use stop losses, risk controls. Define your maximum acceptable downside, e.g. 8 to 12% per position, and stick to it. For speculative names, use tighter stops or trailing stops. Watch catalysts. Earnings dates, guidance updates, regulatory announcements, or sector rotation can move these names fast. Keep a calendar of upcoming events for all 5 stocks. Be nimble with exits. If a stock outperforms rapidly, don't be afraid to take partial profits. If a thesis breaks, guidance misses, execution falters, exit quickly. Don't fall in love. Time horizon awareness. For swing traders, target 1 to 3 month moves, lean on technical confirmation. For medium to long-term holders, let the operational fundamentals play out, but monitor quarterly results closely. Risks, caveats, and market realities. Before I wrap, you must be fully aware. This is not financial advice. This is educational content. Always do your own research. DYOR. Key risk factors to consider. Macro risk, inflation surprises, central bank hawkishness, geopolitical disruption can derail momentum stock rallies. Valuation compression. If investors rotate out of tech growth, many of these names could see sharp pullbacks. Execution, guidance risk. If a company fails to deliver or upgrades reverse, the stock could drop sharply. Overconcentration. Don't bet your whole portfolio on 1 or 2 names. Even the best setups fail sometimes. Volatility, especially Oklo and AMPX, are high volatility names. You must expect and manage big swings. It's also possible only a few of these will perform. Maybe 2 or 3 hit strong, others lag or correct. That's totally normal in momentum plays. Let me summarize. The broad market is showing strength, creating a favorable environment for breakout names. I introduced 5 hot stocks with upside potential: CrowdStrike, CRWD, Workday, WDAY, Salesforce, CRM, Oklo, Amprius, AMPX. Each has its own narrative, risk profile, and catalyst timeline. Use diversified sizing, staggered entries, stop losses, and stay alert to news flow. Don't let FOMO force you. Wait for confirmation, be disciplined, and manage downside. If you liked this video, smash that like button, subscribe to Asset Bloom, and hit the bell icon so you don't miss future stock breakdowns. Drop in the comments which of these 5 you find most compelling. Until next time, trade smart, stay informed, and may your portfolio bloom.